Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories in corporate filings, and today we are diving into something that smells distinctly like borrowed money and extended deadlines. This is a filing from Martin Marietta Materials Incorporated, and while it might sound a bit dry, we will find the juice in here. The big takeaway is a loan modification and extension and a bit of a financial reshuffle, which often tells us a lot about a company's strategy and its confidence in the future. So Martin Marietta Materials Incorporated, better known as MLM, to the market. They are a big player in the construction materials game. Think aggregates like crushed stone sand and gravel and heavy building materials. They are pretty much the bedrock of the construction industry, literally. Now into the meat of it, the company has signed a loan modification and extension agreement. This is not just a small tweak to their borrowing situation. It involves a substantial $800 million 5-year senior unsecured revolving credit facility. This is basically a big credit line that the company can tap into when it needs cash for its operations or for new projects. What is really interesting here is that they are extending the maturity date on this loan. This means they are pushing back the date by which they have to pay back the borrowed money. The new maturity date is the 21st of December 2030. Now, why would a company do this? Well, extending debt usually signals a few things first. The company is likely expecting to need this credit line for longer than originally planned. This could be because they have else growth plans and need access to funds for acquisitions or to build new facilities, or it could be that they are anticipating some tougher economic times ahead and want to secure their funding lines well in advance. Second, it also shows confidence from the lenders JP Morgan Chase Bank, who is the administrative agent, along with other big banks like Deutsche Bank Securities Inc. PNC Bank National Association, Truist Bank, and Wells Fargo Bank National Association are all on board with this extension. This suggests they believe Martin Marietta Materials Incorporated is a solid bet and will be able to repay the debt on the new timeline. Now, let's talk numbers. This $800 million credit farce. Ility is a significant chunk of change for a company like Martin Marietta Materials Incorporated. It's a vital tool for managing its operations and growth. Without easy access to such funds, their ability to seize opportunities or weather economic storms could be limited. Think about it like this: $800 million is enough to build quite a few major infrastructure projects, or to buy several smaller companies in their industry. By having this loan extended, they are essentially giving themselves more breathing room, more flexibility. They are not pressured to repay this large sum in the immediate future. The company's stock ticker is MLM, and it is traded on the New York Stock Exchange. This loan facility is crucial for maintaining their operational financial health and their ability to invest in future projects, which is key for any company in the materials sector. This report filed with the US Securities and Exchange Commission is a standard Form 8K, which is used to announce major corporate events like this loan modification. It is important because it provides transparency to investors and the public about significant financial dealings. The company's IRS employer identification number is 56-1,848,578. This is just a tax identification number and not particularly relevant to the financial story we are trying to tell today. Martin Marietta Materials Incorporated is incorporated in North Carolina. This gives us some basic background on the company's legal structure. The filing also indicates that Martin Marietta Materials Incorporated is not considered an emerging growth company. This means they are a more established player in the market and are subject to the full range of SEC reporting requirements. Now let's put this into perspective. Typically, companies use revolving credit facilities for ongoing working capital needs and to finance short-term obligations, if Marietta Materials Incorporated is extending a facility. This largely implies they are either planning for significant capital expenditures, maybe some big acquisitions, or they are preparing for a period where cash flow might be tighter. Consider the broader economic environment. Construction materials go hand in hand with infrastructure development, and housing starts if there are signs of a slowdown in construction or a rise in interest rates. Companies often want to secure their financing. This extension could be a proactive move to ensure they have the funds to keep their operations running smoothly, even if market conditions become challenging. This section, which is covered under item 1.01 of the filing, confirms that this loan modification is indeed a material financial obligation. For the company, it is not a trivial matter. It is a significant commitment. And here we see the full picture of what is being filed with this report. The key exhibit is the loan modification number 4, an extension agreement itself. This is the legally binding document that spells out the terms of the extended credit facility. Now, for my take on all of this, Martin Marietta Materials Incorporated, by extending this substantial credit facility, is showing a clear strategic foresight. They are not just reacting to immediate needs. They are planning for the future. This tells me they are confident in their long-term prospects and their business model. The fact that major financial institutions are willing to extend this credit is a strong vote of confidence in the company's financial stability and its management team. However, it also means the company is taking on debt and will have to manage these obligations carefully in the coming years. The risks involved are always present in any debt financing, especially with unsecured loans. If the company's future revenues do not meet expectations, or if there are unexpected economic downturns, managing this substantial debt could become a bum. But overall, this move signals a company that is in a strong position and is proactively managing its financial resources to support its long-term goals. They are essentially buying themselves time and financial flexibility, which in the cyclical construction materials industry can be a significant competitive advantage. So what does this mean for you as an investor or just someone interested in the economy? Well, it suggests that Martin Marietta Materials Incorporated is likely to continue investing in its business and potentially growing through acquisitions or expansions. They are betting on continued demand for their products. Alright, that is our breakdown of Martin Marietta Materials Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.